We are back on the strategy session. Let's get you caught up, as we always do, on the other headlines that have been making news today. Retail sales up for the fourth consecutive month in October, 1.2%. The biggest growth came from the auto sector, as sales of vehicles and parts jumped 5%. And a pair of deals halting last week's market slide, at least. In tech, EMC buying Isilon Systems for $2.25 billion. Isilon specializes in video storage. The deal, just the latest in cloud computing acquisitions that began this summer, of course, with that big fight between Dell and Hewlett-Packard over 3PAR. One reason why this stock is trading very close to, if not almost above bid, because, of course, of what happened with 3PAR. And we got an even larger deal. Caterpillar buying mining equipment maker Bucyrus for $7.6 billion. Again, cash, and another big premium, $32 billion. In fact, that makes nearly $10 billion in M&A this morning alone. We can almost call it an official return of Merger Monday. Some of those companies putting the cash on their balance sheet to work. Easy to do an accretive deal when you're earning virtually nothing. Deals, a stronger consumer, just a few of the many reasons Sharmin Mossavar Rahmani is bullish on the U.S. stock market. She's the Chief Investment Officer for Goldman Sachs' Private Wealth Management Group. Welcome back.
Thank you very much.
And tell me why, again, because, well, okay, hey, somebody bullish. Not that there aren't, but what about it, especially given what we see U.S. position in the world? So much noise these days about QE2 and the dollar and a lot of different cross currents. Why do you feel good about the U.S. market?
We are generally optimistic about the U.S., both short-term and long-term. In terms of the more short-term view, the reason we're optimistic is severalfold. First and foremost, corporate balance sheets. American corporate balance sheets are pristine, tremendous amounts of cash. We've just gone through third quarter earnings, and they've been excellent. We've had year-on-year earnings growth at about 30%. We have sales year-on-year about 7%. So just very good momentum. With all the cash that they have on their balance sheets, as you can see, it's a great opportunity for them to invest, whether it's R&D, whether it's acquisitions.
Words,
and you
deals.
just mentioned,
I mean, we just saw Caterpillar, in fact, funding some of the deal to buy Bucyrus from their balance sheet, as you might expect, given that cash is sitting there doing virtually nothing for this
exactly. That cash has to get used. So whether it's acquisitions, whether it's CapEx, whether it's buybacks, that is all generally good long-term for U.S. equities.
How long does that go on for? You know, we've had this conversation. I've had it certainly with many people who point to it as a real positive, and it does seem to be happening. I mean, the pace of deals, perhaps not what some would want, certainly not the investment bankers, but there are buybacks, there are dividends. Does this play out over a long period of time, or is there sort of a finite time limit and say, by the end of 11, that'll be done?
No, we're expecting this to continue for a while. We're expecting good growth. We think the uncertainty about a double-dip recession is ebbing. We think QE2 just provides some incremental support. And if we just look at the economic numbers for the last couple of months, they've generally been more supportive than not. If we're looking at numbers such as the non-farm payroll numbers, claims, ISM index, you just mentioned retail sales right now. Right. So when we're looking at these numbers, you would say we also have some good economic support. And what's happening is you're seeing more and more economists actually revise upward their numbers. And we think that will provide some good activity and good support for equities for the foreseeable future.
Is it more of a growth story,
2011.
I mean, are you looking for multiple expansion, or ultimately are you simply looking for corporate America to continue a pace of growth that at least will result ultimately in higher stock prices based on that growth rate?
It's such an interesting question regarding what is fair value in U.S. equities. We think equities are fairly valued at current multiples. Looking at trend earnings, we like to use trend earnings to have an anchor and not get swayed by the mood of the moment. And you could see a little bit of multiple expansion. We're not basing our positive view of U.S. equities based on that, but in fact, when you have low and stable inflation, and if worries about deflation dissipate, we actually could get a couple of multiple point expansions, but it's really in earnings.
It's an earnings story, because you're saying fair value based on the current multiple.
Exactly.
So that's not what you're necessarily looking for. Let's, obviously Europe is on a lot of people's minds as well, and we talk a lot about it. You've talked about the third quarter earnings and improving economic conditions. When you look at the U.S. vis-a-vis Europe as well, and a lot of the countries we've been discussing, they're not Germany, not necessarily France, but some of the others. Give me your sense as to how that's ultimately going to play out in regard as well to our own market and its performance.
When people think about the long-term picture for the U.S. and we look at the long-term picture for Europe, we do have concerns about how Europe is going to get through its sovereign debt crisis. We just heard that Greece revised upwards its deficit. This deficit just a year ago was at about 3.7%. It was just revised again to over 15%. So there's a lot of uncertainty as to what they're going to do in terms of getting out of this problem. And there's actually an expectation. The market is pricing somewhere between 50 to 60% probability of restructuring.
Right, of some sort of a default let's call it what it is. People don't like to use the word. And they're also saying that about Ireland as well. I mean, there's certainly that possibility there.
With Ireland, the question is a little different in that Ireland is trying to deal with its banking sector issues, and that has resulted in a deficit of about 30%. But people aren't talking actually about any kind of restructuring needed anytime soon. They have plenty of cash through the middle of 2011. The key question is between Ireland, Portugal, Spain at 20% unemployment, and Greece, and possibly some other countries. Can the European markets deal with this? And is there enough money? There is the European Stability Facility, but is that actually enough to ride out the storm? And if any of the major countries have to call on this capital, it's not quite the same support system.
So give me your sense as to what you think. Is there enough, or are we going to be dealing time and again with these concerns about Europe that ultimately will prove well-founded because the problem is not going to go away?
We think this is going to go on for a while. We're going to have some headlines, and risk premiums going to increase, volatility is going to increase. They're going to have a couple of actions. But I think the statement from Merkel about the need for people to participate in the restructuring, if that gets necessary, is a very important message. There's only so much that Germany wants to do in terms of supporting all the peripheral countries. And I think that's one of the weaknesses of the Eurozone. We've heard about it before. We heard about it in May and June when people were talking about, can you have a viable monetary union when you don't have fiscal and political union? And obviously the founding fathers of the United States dealt with this 200 plus years ago when Alexander Hamilton said that.
Political union, because we certainly have a lot of disharmony in our own political system, and yet you feel like we're the best house in a bad neighborhood in some ways when you look at some of what's going on in Europe, don't you?
Well, I think we're in a very good neighborhood ourselves. I think the United States is in great shape. While we do have
great shape.
Deficit,
you really believe great shape?
In long term, in terms of the U.S.'s resilience and ability to deal with the problems, the track record of the country is that they have. Just over the last 30 years, we have had 6 episodes where we have dealt with tax reform, budget reform, and been able to deal with issues to cut the deficit and improve the GDP profile. Can we do it again? Yes. And in fact, 5 of those times were in divided government. So the question isn't that we don't have problems. The question is, do we have all the tools, the willpower, and a system of governance that can address it very readily?
So you're not one of these who buys into the basic theme that this is the century that will see China in ascendance, and in some way, even if that is correct, that the U.S. will lose out as opposed to perhaps also benefiting?
We don't think China's growth will come at the expense of the U.S. We don't think the U.S. is going to lose out. And in fact, we've seen this cycle before. There have been so many times where people have questioned the strength and the dominance of the U.S. We've actually had so many different cases, starting with when the Soviet Union sent Sputnik as a satellite into orbit, and everybody said, we don't have enough mathematicians and engineers, this is the end of the U.S.
Were they saying that back then, too?
Exactly. That is what's so amazing, to the fact that people were saying Japan could do no wrong and the U.S. could do no right.
Late 1980s.
And just think about what happened to their growth, their deflation, their equity markets, their real estate, and think of what the U.S. has done since that. So we have seen many such episodes where people have questioned the resilience, the flexibility, the dominance of the U.S. But whether we're talking about economic dominance, whether we're talking about military dominance, or whether we're talking about innovation, education, governance, respect for property rights, number of Nobel laureates, you could just go through the list. America is still clearly the dominant country.
And final thought here, I know you have about the Chinese market that you feel people should understand in terms of where it's ultimately been, given what is extraordinarily strong GDP growth. But if you take a look at the chart, 1993 to present, it tells an interesting story.
Yes, you mentioned earlier we've seen some of these things before. It is incredible. If you go back to the early 1990s, there were so many people in our industry saying everybody should be invested in Asia, and specifically, quote unquote, China was the best and the brightest. So this is a quote that actually was being made oftentimes then. But what's interesting is if you look at U.S. equities versus Chinese equities, U.S. equities, in spite of a tech bubble bursting and the financial crisis, have actually outperformed Chinese equities by just under 8% a year since the beginning of this MSCI index, while their economy has grown faster than that of the U.S. by about 8%.
So I'm not sure, are they going to make it up? Does that mean their stock market's undervalued and ours is overvalued? Or how am I supposed to think about that?
Well, this is very interesting. Their equities are actually on a relative basis, given earnings in the U.S. and earnings there, trading at a slight premium, maybe about 10% relative to their own history, but actually relative to where they've traded compared to the U.S., they're actually trading at a premium of at least 40%. And in our view, that premium relative to the U.S., based on historical relationships, is not warranted. We actually think that that is too expensive.
Sharmin, stay right there. Thanks for your thoughts on that. We're going to have more strategy session coming back right after this.
For years, I was just a brewer, till one of the guys brought in some fresh bread that he made from our pale ale. And from that first bite, I knew my business would never be the same.
When businesses see an opportunity to grow, the Hartford is there, protecting their property and helping them plan their employees' retirement.
Beer or bread?
See how the Hartford helps businesses at achievewhat'sahead.com.